What is going on, everybody? Happy Sunday evening and welcome into our latest TDR Small Cap Sunday podcast. I am your host, Shad Dales. For those of you that are new to this program, we highlight 5 small cap stocks that have grabbed your attention and may want to grab your attention as well as we dive into all their income statements and balance sheets and companies that we like in the small cap space. So, as usual, let's welcome in TDR lead financial analyst, Bill McNarland. Happy Sunday evening. Good to see you as we get set for 5 new companies. Some interesting ones here this evening.
Yeah, for sure. I'm looking forward to it. Did some interesting research and happy to chat about it.
Yeah, you dug deep here. I looked at some of these
Yeah,
companies.
for
You got
sure.
a carbon company, a high-tech cement company, global shipping, an online car parts company, and finally a pharmacy company. So let's jump into it. And with that, before we get into it, as usual, all views on the Small Cap Sunday podcast, the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or guests as investment advice. And the views on this podcast are solely intended to be informational and are not investment advice. All right, let's begin. First company tonight, it's called Carbon Streaming Corporation, trades on Cboe Canada under the ticker symbol NETZ, and on the OTCQB under the ticker symbol LFSTF. It's located in Toronto, Canada. Share price 60 cents, market cap 31 million. Shares outstanding 52 million, and daily trading volume very small at only 13,000. So first up, Bill, I'm going to ask this first question with all these stocks here tonight. What has been the 52-week range of this share price for the company?
Yeah, so the stock's been around 48 cents up to $1.19, so it's sitting at 60 cents today. So it's in that range there, a little bit off its low, but it IPO'd for $5 in 2001, or sorry, 2021, just 3 years back. So it's way off from where it IPO'd, where people thought it had fair value at the time.
So based off of that, and I know we bring this question a little bit later on, but I'll bring it up off the top here tonight. With this being down so much, is this a stock that's on sale, or do you think it's a trap?
Yeah, we'll find out. So this is very different from everything else we normally look at the on the show. This is an asset play. You're buying. This is a long-term asset play for people that want something environmentally friendly. So what this company does is they invest in global projects all over the world. They do, for example, reforestation. And
Okay.
so they give a company money, maybe Brazil, Mexico, to plant trees, and then there's going to be a carbon offset that can be purchased by other companies because of the environmental impact that this project has. So those trees aren't going to grow for a while. These are long projects. So they invest in it, and then they'll start monetizing these things on carbon exchanges in
Gotcha.
years in the future.
How long are some of these projects? Like, do you have any idea how
Some
long
of the
they're?
projects are going to start to monetize this year, but these contracts, some of them go out almost 100 years that they're going to be
Mm,
able to sell the value of the carbon. So the question is, there's twofold. One is the big one is what's the future of carbon pricing? Where is it
right.
today? What's the
Right.
future? The second one is while you're waiting for the trees to grow, can you pay for the lights to stay on?
Right.
So that's
Right.
the big thing. But what is unique about this company? I can't find anything else like this. Like we'll put up a chart here,
I
and
was
you're
going to
looking for a
say, I've
carbon. Yeah.
never even heard of something like this. So, like, is there much competition that pertains to it?
No, so here's 7 ideas if you want to invest in carbon. Like one, is Occidental Petroleum because they do carbon capture. If you invest in that, you're actually buying an oil company that does some carbon capture. So that's not going to appeal to people that are environmentally friendly that want this. There's
Yep.
an ETF that does a little bit stuff that tries to invest in companies that have some global carbon footprints, but there's no pure play. This is the only pure play I could find in the capital markets where it's actually kind of like a long-term carbon bank that you're investing in this stuff for future returns. So this is very well suited to someone who wants a pure play and that is that wants an environmental play.
Do you want to elaborate a little bit more on what pure play, what you mean by that, and why it's important?
Well, it's the absolute opposite of something like Occidental Petroleum. With that, you're getting a little bit of carbon capture and a big oil company.
Okay.
This is all carbon environmentally friendly. Let's think about this. It's kind of like a vegan goes out to a dinner and they have a plate comes to them with steak and some gravy on the potatoes and a little bit of corn. Well, they just get a little bit of the corn. But this is like going to a vegan buffet. It's only environmentally friendly type company that's focused on the carbon and the benefits to the environment. So this is a pure play that you just get that benefit.
So a little bit more enhanced than a bunch of university students going up north in the summertime and planting trees.
Absolutely. This is and this these projects here will show a picture up here of where they are in the world. It's all over the globe. Yes, the company's based in Toronto, but this is a global company that's doing these projects all over the world for the benefit of the environment.
Do we know who the CEO executives are within this company? 'Cause
They had they're on the website. There was on the investors deck. I wasn't familiar with any of them, but this looked like a pretty interesting idea.
okay, let's go to their financials. Look like current cash situation is showing what along with working capital.
Yeah, so we're going to completely skip the income statement because it's a long-term play. So,
Okay.
like you mentioned on the balance sheet, they have a market cap of 31 million. You can see here on the chart or the table, cash of 59 million, working capital of 47 million, but the breakup's 102 million of what they've spent. That's not the net present value of the future cash flows. That's just what they spent of investors' money to invest in these projects. So, because the stock's down, you're getting $102 million investment for $31 million. So if people were excited at the
Note
IPO,
that down.
it's way better to be excited now about this. Now, this is assuming that carbon prices don't really do much.
Yep.
Carbon prices now have been between $3 and $5 in the last few years. There is some predictions from Statistia that it could go as high as $238 a ton by 2050 if the world keeps up with what its global mandates are for the environment. So this could be a huge upside if the world follows its plans in trying to reduce the carbon footprint.
Well, 100% they are. And on side with government officials, which is even more telling. But,
Yeah.
2050 is still a long ways away, but if you factor in $3 to $5, what's that price look like even in 5 years from now? Which is pretty
Yeah.
telling to say the least,
Yeah,
right?
and we see this all the time. You purchase a flight, with an airline. They say, "Would you like to offset your carbon, for an extra $50?" And this is how that business is done. This group is providing the backing so that companies can say something like that.
You've also outlined here the breakup value. You wanna explain what that means and the
Well,
importance of it?
so the breakup value is just what they invested in these projects with real cash. This hasn't been marked up. If the price of carbon goes up, this number doesn't change in accounting. We don't do that.
Okay.
So if they had a raise at their IPO, they had to raise $100+ million to invest in these projects. They invested in these projects, and now as a shareholder, you could have this for 31 million. So it's 30 cents on the dollar what previous investors paid. So it's interesting when you look at it that way.
What a great find. Alright, finally, levered free cash flow showed what?
Yeah, so it's negative $8 million. So they have runway to do this until the carbon credits start coming. Their assets are growing if the value of the carbon prices go up. So they have runway here to wait. But eventually, in 2, 3, 4 years, they're going to have to monetize those costs and then get to break even. So this is a long-term plan for people that want a carbon play
Yep.
in the market that's at a discount.
Okay, so valuation is almost threefold from what it's currently trading at. So moment of truth, looks like green check mark time. You would own this stock,
Yeah,
correct?
this is excellent for a carbon play if that's what you need in your portfolio.
Okay. Well, that is a great find. That could be your best find yet.
Oh, yeah, it's an interesting one for sure. It's
Well,
different.
a lot of moving parts to say the least. All right, so we got our first green check mark. Let's now go to second company of the evening called Cematrix. Am I pronouncing that correctly? Corp
Yes.
trades on the TSX under the ticker symbol CEMX. Current share price 34 cents. Market cap 51 million. Shares outstanding 150 million, and daily trading volume is somewhat respectable for a small cap stock, around 117,000. So first up again, 52-week range has been what for this stock?
Yeah, it's been between 18 cents and 54. So it's sitting right there in the middle on 34 cents. And so this is an interesting cement technology company. They're North American wide. They have offices all through the US. They happen to be based in Toronto as well. But this was interesting when we look at when I was looking in about how much better for the environment and
Okay.
also for costs their type of cement is and for quality compared to traditional cement. And so I wanted to see if the numbers back this claim. But this was an interesting story to look at just based on that basis to start.
Well, you've noted this. They specialize in cellular concrete. Do you want to maybe elaborate on a little bit more? As you said, like it's certain cement, did you say? Like, how does this work?
Yeah, so this is basically a lighter weight, higher performance material by changing what goes into the concrete mix
Okay.
so that they can produce a better product. And so here I'm going to show a chart here, a case study using it. This was a project that came up. The project ended up having 40% less costs,
Wow.
25% less emissions,
Yeah.
70% less excavation, and 75% less trucks. So this is a real interesting form of cement that really, cement's really old school, but this is like a cement technology that they've come up with.
So overhead costs and margins obviously are going to help in that case. That's a good find as well. All right, let's look under the hood in their latest financials. First up, what was revenue like over the last 12 months along with growth percentage?
So the revenue is real. Like when you look down these numbers, this is a really amazing table. They have $52 million of market cap, but 54 million of revenue. Their revenue growth was 65% last year,
Impressive.
26% over the last 3 years each year. Their gross margin on cement is 25%.
Wow.
Which is for a basic material is something. And their SG&A is only 18.6. So because of that, they had an EBITDA close to $5 million. But what's interesting, I'm going to pull up one other chart here about their record momentum. They have $35 million in new contracts.
Okay.
They're bidding on 450 million of additional contracts. But in the United States, the replacement of infrastructure plan that's been announced is $550 billion. You need cement. So this is it's kind of an old school area to be talking about a cement country, company, but they have the technology and they have the real growth behind them with what has to be replaced with infrastructure in North America.
Where are they based out of?
It's Toronto, but they have plants all over North America, all through the U.S., and their growth is focused on the U.S. and the infrastructure plan.
Well, Toronto, if you don't know, when it comes to development, has been at the epicenter of the North American development market, knowing how much that city has grown. But a lot of people involved in commercial, retail, or I should say real estate, has been a very viable thing to say the least over the past 30 years, but a good find to say the least. All right. What else are we looking at? We covered off, obviously, revenue and levered free cash flow came in at what?
Yeah, $5 million last year. So they, 10% of their market cap, and so this is real. They're making money, and this is an exciting growth story with a strong balance sheet. Their credit score is 7.7. Everything is looking good with this company, and you got high growth as well.
Strong credit score, 7.7. Okay, another green check mark. Moment of truth. Would you own the stock? And the answer is yes.
Absolutely, I just love companies like this. They're super easy to understand.
Great. All right. We've got two check marks. All right. Next up, third company tonight called Castor Maritime, trades on the NASDAQ under the ticker symbol CTRM. It's located actually in Cyprus. Current share price $4.43. Market cap 42 million. Shares outstanding is only 9.6 million. Again, 52-week range for the share price was what?
So it was between 285 and 650, but I love shipping companies. So all these shipping
Why
companies are
is
based
that?
in, wow. Well, one, they're just fun. So first
Yeah.
of all, like all of them are based in Cyprus just for tax reasons and
Okay.
liability, just similar like cruise ships. You're on
Yep.
Royal Caribbean, it's based somewhere else. But they found Cyprus as the haven for being shipping companies. But as a stock trader, these are the ultimate volatile ride. They're always flying around based on what the economic outlook is, and they turn first. When the economy is worrisome, they drop tremendously, and then they go way up when the economy is looking better. And so, because of that, they're really fun to trade. But when they get cheap, they often have extremely good value compared to their assets. So this is an example that this stock is crushed. It's down about 90% from its all-time high. just in 2019 before COVID. It's down
Yep.
97% actually. So this is interesting to start to look at the books. What is it like, and to understand the shipping business.
So big swings based on the overall health of the economy, because as you said, the shipping industry is obviously a big one when the economy's humming, right?
Absolutely. So I'm going to pull up a chart here. If people aren't familiar, it's good educationally based. It's called the Baltic Dry Index. This is the cost that carriers get paid to move stuff across the world. And so you can see that this is a very volatile metric. It's used, a lot of people use it to see how the economy is doing. You can see still back in 2007, things, was $11,000, per unit to ship stuff. That came down a lot. After COVID, it spiked again. But now we're at a kind of the median level, the average level, but the stocks are way down. So if people
Yep.
think that lower interest rates are going to improve the economy, this potentially is a play for an upside.
Okay. So, do we have any idea what level of competition is involved in this space?
It's there, but there's an extreme barrier to entry because the ships cost so much. So, for example, there was a press release that this company just bought a new ship. It's around $20 million to purchase a ship. It's similar to buying a plane. So, there's a huge barrier to entry to be able to get into this business. So,
So
because of
once you
that, but it's a commodity, so that's why the price. Like if I'm shipping someone something, I don't care which ship it goes on or which company. I'm looking for price, and
Yep.
so that why the industry it doesn't have a lot of, is more based on price. And so because of that, if someone comes in, if they have the money to have the ships, they're there, and they can make some money off it pretty quickly with the bookings.
All right. Sounds interesting to say least. I'm curious to see what was their revenue like for the last year, and they're along
Yeah.
with
So we're going to remember that we see on this chart the market cap's only 42 million. They had revenue of 84 million dollars. Their revenue growth was down last year by 30%, but over the last 3 years it was up 98% a year. So this is volatile. The shipping industry is very, very volatile.
all
But they're
dependent on the economy, right?
all on the economy. If people, how much stuff do you want to buy on the other side of the world is based on your outlook of the economy, right? It's what the
So for
margins are good if things are working, like the 54% last year. There's no SG&A because you're not trying to sell the benefits of your shipping company. It's just based on price. So last year they had EBIT of $31 million, which was nearly their market
massive.
cap.
Yeah, that's
Yeah,
impressive. So
yeah,
forget make America great again, make the world great again, right?
yeah, for sure. For if we want to invest in shipping.
All right, gross margin again in SG&A came in at what?
Yeah, the gross margin was 55%. SG&A was less than 15% because they're not doing an advertising spend to get people to come to them. It's all
Yeah.
based on price.
Current cash flow situation along with working capital showing what?
Yeah, the balance sheet's where it gets goofy. So they have $42 million market cap and they have 300 million sitting in cash. They have working capital of $270 million. The breakup
Massive.
value, the value of their ships after they're depreciated, is 503 million. So it's 10 times what the market cap is. So there's an unbelievable hidden value when these stocks are crushed, and then they
Yeah.
can just have these huge rallies when things are going. Their credit score is 19.6. So
I was
this
just gonna
company
see
is not going out of business.
Yeah, I was just gonna say that based on those numbers, they got a pretty healthy credit score. All right, time for our third green check mark of the evening. As wow, that is a staggering number to look at their current cash flow situation and what they're currently trading at. But this is another green check mark, correct?
For sure. I love these types of companies.
All right. Fourth company this evening. It's called CarParts.com. Trades on the NASDAQ under the ticker symbol PRTS, located in Los Angeles. Current share price 86 cents. Market cap is 49 million. Shares outstanding is 57 million, and daily trading volume is decent at 1.1 million. This is a growth stage company, as you best described. So, again, how has the stock performed over the past 52 weeks?
Yeah, so the 52 weeks, it's been between 72 cents and $4.27. So it's now at
Whoa.
86. So it's
Okay.
down for sure. During COVID, at its peak in 2021, it was over $20. So this stock is down 95% from COVID.
What's
There was
happened?
a lot of people were working on some projects during COVID, but how I came across this company was I was looking to source parts for a 60-year-old vehicle
Okay.
and for a project, and I wanted to know what was available in California. And it turns out I was so amazed. you want to order a gas tank for a 60-year-old vehicle. You can have this in 2 days,
That's
and
it.
just at a click of the button. Yeah, it was basically like an Amazon
Can I ask what kind of
of
car you're working on?
this is, it's interesting. I don't want to spill the beans because there's a viewer who is going to be gifted this project, and so
Oh,
I don't
so this
know
is
if they're
for a
watching
friend.
this show. So this is someone I don't want to, if they're in
Okay,
case they're
fair enough.
watching this episode, I don't want to talk too much about it.
All right. Well, nice. I guess we got to get on Bill's good side. He'll buy you a nice vintage car with a 60-year-old gas tank. I like it. All right. It's a cool concept to say the least. But it's pretty unique to say the least. How did you find this again? This company? It was just you were looking
Yeah,
for.
I'm sorry. So I always, whenever I find something interesting in my personal life, so I found a company that could do what I needed to do very quickly, and I thought this is amazing. I went to
Yep.
find out, are they public? What is the stock all about? So as a customer, I was extremely excited. So I said, let's find out about the stock.
Okay. Revenue. Let's go into the income statements. Revenue from last year and growth percentage showed what?
Yeah, so the revenue is real. 633 million people
Whoa.
spending money on this company online. Um, Revenue growth was down minus 5.7 last year, but that's the economy is a little bit slowing up a little bit. We see this with a lot of companies. 3-year numbers are good, 15% a year.
Okay.
They have the gross margin at 32%. They
Yep.
sell $1,000 parts. They make $330 off it, but it's the SG&A is killing them. And we see this with all these online business. So to get a customer to spend $100, they have to spend $35 on that.
Wow. Why is that so much? Can you
It
walk us
it's
through
so competitive. Like we have not found an online focused company or brand
with low
that's
cost?
been with low cost. The other day I was looking at some
So it doesn't
statistics about.
matter what industry you're in. It's just like if you're using a platform with a dashboard, costs are costs regardless of what you're selling.
It's really tough to get custom, and we see this. You have to do all the website work, the SEO work, everything, getting drive. You're spending money on advertisements, right? That's tough.
I know. I know it is. All right.
Yeah.
Current cash flow situation, working capital shows what?
Yeah, so they have working capital of 60 million. But this is where it gets challenging when we start looking at the cash flow statement. They have negative free cash flow of $39 million last year.
So why
So
is that?
it's a tough market. So they're acquiring, in order to acquire, you have to also spend money to be
No
putting
kidding.
this online, everything together. It's a challenging business. And so I'm ecstatic as a customer,
Yep.
but it just costs too much to get me to come to that website.
Could they break through this eventually and turn this around? Because the next question is that moment of truth, would you own this stock?
When I look at some of the other companies we saw, like the cement company, they have
Yep.
huge revenue momentum behind them.
Yep.
This seems to have stalled.
Hmm. Even though if you look at that fat number of over $600 million, obviously the overhead cost to acquire whatever they want to acquire and then the online costs just add up.
Yep.
Goes to show that you can't just look at revenue dollars. And that's something that we see a lot of the times in the cannabis space too. It's just like, are we seeing any businesses that are profitable and making money? That's the most important question in due time, right?
Yep. So unbelievable business. Big shout out to them. It just is not something I would care to own at the current time.
Okay. There's your first X. All right, we got 3 green check marks and 1 X. Now time for our final company here this evening. It's a company called CareRx, trades on the TSX under the ticker symbol CRRX. Current share price $1.87, market cap 112 million, shares outstanding 60 million. Daily trading volume is pretty quiet at 22,000. So again, 52-week range. What should we know?
Yeah, the range is $1.10 to 243, so it's right there in the middle at
Okay.
$1.87.
Okay.
So I thought this was something interesting to look at. I like the pharmacy retail business, but this was interesting how they had such a huge niche here in this business where they're set up in long-term contracts in senior homes to be able to provide medication in a safe manner that's allocated properly to the patients for a service to these long-term care homes. So I
Okay.
thought this was a very interesting positioning. And they're doing this using technology in a safe way that allows the government rules to be exercised for safety of keeping the medicine, and also that it's out there and it solves all the problems and reduces cost of not having to have the pharmacist on site.
Have they signed any notable contracts with any specific companies that, because let's face it, you got to sign contracts when it comes to this, and it's all based on client relationships.
Yeah, let's take a look here. I'm going to bring up this chart here. The second one here, the operational financial highlights. They have contracts with 1,500 senior homes, 91,000 beds. With that, though, the contracts, though, are long term, 5+ years in these
Wow.
contracts.
What
And
do
so that
normal contracts usually go for? Any idea?
Well, let's compare this to the rest of the pharmaceutical business. That if I need a prescription, it's a one-time thing,
Of
and
course.
people are trying to get me to come there and spending money as a customer.
Yeah.
So 5 years was pretty intriguing to me to
No
compare it
kidding.
to a regular pharmacy business.
Yeah. Not to mention an aging country in both the US and in Canada as well, right? So
Yeah,
what are
we'll pull up this other chart. This was just interesting to see this other one here. 1 in 5 North Americans are over 65, and typical seniors in a care home take 4 to 10 medications a day.
4 to
Uh,
10?
so here's where this is where the niche was of the company. So if you have everything packaged for one person for the day, instead of someone trying to get 12 different things for this one individual, you can
Yeah.
see where that cuts down a lot of time and there's a big saving. And not having that on site was a reason that long-term care homes would do long contracts with a company like this.
That's close to 10 million people in Canada and an additional 70 million in the US. So that's a pretty big market. So total addressable market, you're looking at 80 million people potentially doing between 4 and 10 medications a day. That's a good find, Bill. So ultimately, what do you think people are missing here then?
When I don't think that, I think the stock is it's in between this 52-week range. So it's chugging along, but I think as it starts to produce more and more numbers over the years, I think it'll come around. And when I looked at the financials, it looks pretty interesting, and we'll go through that.
Okay, let's look at these financials. Revenue and growth percentage over the past 12 months showing what?
So the revenue is $336 million. It's real. The revenue growth a
Impressive.
little choppy, -3% last year. They signed some bigger contracts the year before, but over the last 3 years, they're growing at 32% a year. Good gross margins, 29%. The SG&A is 27. It's always lower. That's what we're always looking for: a lower SG&A than your gross margin. And so they have EBITDA of $21 million. And keep that in mind; it's only $112 million market cap. They're putting out some earnings there for sure.
Wow. Okay. Cash flow position and working capital shows what?
Yeah, so the working capital is pretty flat, but they got 7.2 million in the bank. It took some time to get to the stage that they're at. There was an investment in the past in doing this. But their leverage free cash flow last year was $30 million. So again, it was they got a market cap of 112 million, leverage free cash flow of 30 million. So this was really unique. And I'll tell you, in the last 2 or 3 months, I looked at a lot of, let's call it, healthcare service providers,
Yep.
similar to like this and other things throughout North America, mostly in the US. They were all a disaster. They
Why?
couldn't
What
get
was
the
the
margins, especially in the US, with the different healthcare programs that there were.
Yep.
But these ones, the Canadian healthcare programs and the pharmaceutical system works very well to be able to have margins that work.
Okay. One thing I want to point out too is their total assets. You outline that in your notes. You want to maybe explain as to why the importance of that is?
Yeah, so this is an example. Their liabilities assets is makes sense at 63%. That's fine. The breakup value of the company is negative because they spent a lot of money getting to this place, but it's
Yeah.
cash flow positive. You're not going to make money. This isn't an asset plays. This is getting off their cash flow that they're producing and the growth of it. So that's not that's normal. Most investors aren't looking at the asset plays anyways. So to me, this was something still quite of interest, even though there's not a breakup value to the business.
When did the company form again? Do we have that or
I
no?
don't have that on it, but it has a quite a history here. I don't have the IPO date, but it's definitely an established business.
Okay. And it's based out of what? Toronto?
Yeah, again, it's Toronto. This is the one company that is actually a Canadian company on our show. The rest technically were on the Toronto Exchange or based in Toronto, but they were more US focused business. This is a Canadian pure play.
All right, levered free cash flow. Last thing, what did it show?
Yeah, so the leveraged free cash flow is $30 million with a market cap of 112 million. So
Wow,
this is, it's trading at 4 times cash that it had in their improvement. So it's this is something that's very reasonably valued.
very conservative to say the least. All right, sounds like we got our fourth check mark here tonight. Green check mark, I should say. So good finds here this evening. Moment of truth, you would own this last stock, correct?
Yeah, for sure.
Okay. All right. Well, good finds and some really interesting companies to say the least. I think the one that grabbed my interest or, the most was what was the one? Correct me if I'm wrong. It was the tree planting carbon one, which is the first one off the top, carbon streaming. That was an incredible find that you found there.
Yeah, it
But
was interesting. One of the only power plays, pure
trades
plays in
on
that.
Yep. So you guys got all the notes there on the charts right there. Trades with the OTCQB under the ticker symbol OFSTF. Let us know some comments below on what you think of these 5 latest stocks. Any further questions that you want to ask Bill, any more information regarding any of the companies, feel free to leave the comments below and we will get this information over to Mr. McNarland and he will get back to you as soon as possible. Great finds. Keep love doing these things, getting great feedback each and every week. But again, appreciate the time. Let's keep in touch.
Yeah, sounds good.
Thanks, Bill. Hey, everyone. Thanks again for watching. Hey, we're humming along, and it's all because of you and the audience and community that we're building. So, again, make sure to smash on that like button and leave lots of comments. Who do we have up next? You let us know. Who should we interview? What companies? Is there anything you like? Is there anything we're missing? We're all here for you. Let's get on with each other and build this community for all of us to benefit. As usual, don't forget to subscribe to our channel because in the end, we wouldn't be here without you. Thanks again, everyone.